This is Matt Bennett, grain marketing consultant with Beck's, coming to you. Talk about the markets here this week. And so, essentially, what we saw last week was just a pretty much a meltdown for the corn market right at the outset of the week. Uh, Obviously, the report was extremely bearish. You came in here and you threw so much production at the market that all the trading algorithms just push sell is all it boils down to. And so corn market obviously had a tough week. Soybean market, to be honest with you, performed quite well. So relatively speaking, whenever you take the corn market down 20 cents, on the week, essentially it's one of those deals where soybeans, oftentimes you might take them down 40, 50 cents, even more. But at the same time, it wasn't a super friendly report for beans, but there was a fair amount of information that came out throughout the week. And so as we look at the market this week, obviously we're going to see how this thing reacts. Okay, so what are the things that kind of I guess played in as far as soybeans were concerned? Well, you came out with data that showed, this renewable diesel industry should get support, from some of the renewable fuel standards. And, you're looking at, maybe 5.2 to 5.6, 5.6 billion gallons as far as, what we could be looking at moving forward, which is a significant upgrade from where we've been. Now, last summer, there were rumors that potentially that could boost up to around like 5.61. And so it's not more friendly than that, but what it is a verification that we are going to have a concerted effort to essentially use some of what we're growing here in the U.S. Domestically. And that's of utmost importance. Another thing that I guess was supportive towards soybeans is that Argentina has had hotter, drier patterns, especially in the southern half of the country. I've talked about that a little bit on here. A lot of the forecasts have tried to bring weather into that part of the world. Most of those forecasts have actually had a hard time verifying. And so last week we saw actually for corn an 11% downgrade as far as good to excellent conditions were down there from one of the reporting services. Beans weren't double digits, but they were also downgraded. And so anytime that you see weather issues in Argentina, you're typically going to see some strength in the soybean, especially soybean meal. And a lot of times soybeans will kind of follow along with that. So there were other factors that kind of contributed to the soybean market stabilizing, if you will. Now, whereas the corn stocks carry out went up a couple 100 million bushels, beans went up 60. So it's not like it was a friendly report. And most of the reason those bean exports went down 60, which took stocks up 60, is that our exports other than China have not been very good at all. Now, bringing up China, one thing to note is that as of this morning, there was an announcement made by Secretary Bessent that his counterpart in China he'd met with in Davos and said that, hey, we've actually fulfilled this 12 million metric ton. And the comment from Bessent said that we're looking forward to them buying 25 million metric tons this coming year. So what does that mean? Are we going to see China stepping in buying any soybeans for the next few months? A lot of folks feel like that won't happen. If we do see it happen, obviously China might be wanting to spread out some of their purchases if they know this is something that they essentially have to do to keep the peace, quote unquote. U.S. soybeans are still relatively expensive. I mean, very expensive versus Brazilian soybeans. As Brazil gets harvest online, they've already been harvesting, but they're really going to get ramped up here the next 3 or 4 weeks. And a ton of those beans are going to be available for the world market. With that being the case, you would assume that China's not going to buy a whole lot of U.S. beans, but at the same time, if they do buy U.S. beans after this 12 million metric tons, I have to think the market will react favorably to that type of situation. The big question is, what are the timing of the purchases? And so, obviously with soybeans, it could be worse. We could have had a worse week last week. That doesn't mean that I'm super bullish here, but by all means, I think that you could see at least a little bit of support in here. And my personal thought is that if you haven't gotten some of your old crop beans marketed, I feel like you really need to have some offers in place to take advantage of any sort of an upward movement. Some folks have called me and said, I can still make these prices work. Should I go ahead and move the beans? And by all means, other than gambling stocks, I wouldn't have an issue with that if you can make this price work. Whenever you're looking at new crop, I'd like to get back up to that $11 price level. But what it boils down to for all of us is, where can you make money? You've got to have your numbers in place. Whenever we're projecting for 26, obviously you don't know what production is going to be. But I usually take like a 5-year APH and plug that in. Something that I would take to the banker, for instance, for a cash flow, something believable, a conservative estimate that you hopefully will be given the chance to beat this coming year. But I see no reason, whether it's corn or beans, to get super aggressive in making sales if you can't make money, whenever you're still 9 months from harvest. I just don't see any reason to do that. With that being the case, I've had some growers say, well, I may not want to go ahead and make cash sales, but what kind of strategy could we put into place, to potentially give us a really strong floor with the chance to participate in some upside? And, I have worked with some of the growers that are listening to this on specific strategies. But, if we look like a December corn at this 450 type level, you could actually set a floor in place at 450 or even 460 if you wanted to. Yes, 460 puts can be relatively expensive, but what do you do to offset some of that cost? And a lot of times we'll enter into a strategy where we put a ceiling maybe up at 520, somewhere in that part of the market. And what that would do is it just caps you out if you get to that level. Now, do I want to do that on a large portion of bushels? No. But at the same time, if I need to set a floor in place, but I want some flexibility, that's one way to do it. And, if your worst sale is $5, I first of all, be shocked. I think we'd all be shocked. But second of all, it's not a bad place to at least have some sort of risk management put into place where you've got a worst case scenario locked in. Now, my personal thought is that right now, I don't feel as much need to get a floor in under December corn, because I think after this report last week, there's a lot of questions as to, is the grower really going to want to plant near as many corn acres as what they did a year ago? I feel like if the corn market fell completely apart, the switching of acreage could get more intensified. So I feel like maybe December corn holds in there for the time being. Last year's spring insurance price at 470 obviously was accompanied by lower input costs than what we could be looking at this year, considering once again we're floating around this 450 level. I mean, 20 cents an acre on 200 bushel corn is $40 an acre less with more inputs invested. So I don't feel like there's a lot of downside pressure on December corn for now. But with that being said, if you do end up planting, let's say 95, 96, 97 million acres of corn again this year, if you do have that type of production and you have any sort of normal weather pattern this coming summer, 450 could look awfully good. And that's part of the reason why with some growers, I'm stepping in and at least setting a floor in place. Yes, we're capping ourselves on the upside, but if nothing else, do that versus some of your input costs. Get some of your worst case scenarios quantified and locked in, and give you a chance that if this market goes ahead and rallies, you could still sell above where today is. But at the same time, if it turns around and goes south, at least you've got a fair amount of bushels price versus a higher price than what we could be looking at later on in the year. So we'll come back at you again next week, talk to you about anything and everything market related. Send your questions in. What do you want to talk about? What specifics do you want to look at? I'd be glad to go over those. So you can put those in the comment box here at the bottom, or most of you that are watching this probably get the newsletter. I've got my contact info there. You just get a hold of me and I'd be glad to answer your questions. So thanks for joining in today, and we'll be back at you next week.